Hello everyone. Today we are going to look into the topic of capital and revenue, expenditure and receipts. Let's start with the word expenditure. Expenditure means spending money, right? Let's say for example, we are running a small business of restaurant. Every day we have to spend some or the other money, whether it is a small amount or big amount. When you spend such amounts or when you spend such money, on big things which helps our business to grow in long run, then that is called as capital expenditure. It is like a one time investment made in the business which helps our business to grow. For example, if we take our restaurant business, we are thinking of automating few things in our kitchen. For example, grinding of batter or cooking, etc. We need huge machineries for those, right? So we want to purchase a machinery for that. So whatever the amount we invest on that machinery will be termed as capital expenditure. Because we will be spending the money only for one time, right? For buying that machinery. We will not be buying again and again in 1 year, right? So these machinery will be termed as long-term assets and will be recorded as in our balance sheet as they have long-term benefit for our business because they will be used for more than 1 year in our business, and the portion of the amount which is invested on such machinery is very huge. And the other examples for the capital expenditure can be office equipment, such as if it is in our example for restaurant tables, etc. And if we are thinking not to rent or lease a building, we may think of purchasing the building. So whatever the amount we invest on purchasing or construction of a building, then it is also called as capital expenditure. Okay, let's come to revenue. Okay, now to keep on running our business, every day we have to spend some money on day-to-day items. For example, in our restaurant, it might be groceries for the kitchen, or the salary to the staff, or paying the electricity bill monthly, etc. These are the short term benefits we receive, right? These will be used pretty quickly. And these expenses will be recorded in profit and loss account, and comparatively, they're, they're less portion when it is compared to capital expenditure, right? So, to sum up, the capital expenditure or the expenses which are spent to grow our business, okay, to grow our business in the long term, and the revenue expenses are spent to run our business on day-to-day basis. I repeat, capital expenditure or the expenses spent to grow our business in long term, and revenue expenses are spent to run the business. Okay, let's come to the next part, which is receipts. Same like expenses, receipts are two types. One is capital and the other is revenue. Same, capital receipts are the one-time amounts we receive, okay, which are not part of our regular business. For example, in our restaurant business, if we are thinking to expand our business and open a new location, we need some money, right? We don't have money. So now we are planning to take a loan. So whatever the loan we take from the bank for the purpose of expanding our business, it will be termed as a capital receipt because it is non-recurring. Okay. And it is not from our main business, right? We are receiving the money for expanding the business. Okay. It is not what is our regular business. Restaurant means we will be selling food. Okay. So we usually receive the money from selling food. So whatever the amount we receive as a loan will be termed as a capital receipt, and it will be recorded in the balance sheet. So when it comes to revenue receipt is nothing but the amount we receive or we earn on regular business activities. Whatever the revenue we receive from the sales, it will be termed as revenue receipt, and it will be recorded in profit and loss account. To sum up, capital receipts are which we earn from outside of main business, and the revenue receipts are which we earn from our main business. Okay, let's revise. once more. Expenditure are two types, capital and revenue. Capital expenses are those which are spent on one-time events in huge amounts and are shown as assets under balance sheet which have long-term benefit. Whereas revenue expenditure are those which we spend on daily basis for the purpose of business which have short-term benefit. They're used pretty quickly and are shown in profit and loss account. Same as expenditure, receipts are two types, capital and revenue. Capital receipts are money received from one-time events and not from our main business or core business and will be recorded in the balance sheet. Revenue receipts are the earnings we receive from our main business activity and are shown in profit and loss account. So differentiating the capital and revenue expenditure is important to give the correct financial position, right? Okay. So keep learning and practicing. See you in the next video.